Moving on to item number 15, presentation of the investment report, quarter ended December 31st, 2015. Mr. Spencer Morrison, he's our elected city treasurer. He's still trying to figure out how that happened.
All right. Good evening, Mr. Mayor and members of the council. Tonight I bring before you the Treasurer's Quarterly Investment Report for the quarter ending December 31st, 2015. And the portfolio value, the portfolio had a market value of $111.7 million. 76.8 of that was in city-held funds. The remainder were in trustee-held funds, which are mostly made up of district bonds. That was a $20.9 million increase from last quarter, and the majority of the transactions were due to Sutter Butte Flood Control Agency activity. About $40 million was received in reimbursements, and about $38 million went out in invoices paid. There was a tax allocation bond refunding from the former redevelopment agency district, and that made up about $34.6 million of the funds. In that, the transaction was happening in the last month of the quarter, and so the bank account balances showed the transactions coming in and out, and it's just a temporary thing for us. It'll be that amount will be already dispersed and gone for the next presentation. Overall, there were 17 investments matured and 17 purchased. The average yield of the investments that were matured or were sold was 0.84%, and the average yield purchased was 1.16. So we're starting to see that continuing little trend that was going the other way when I took this office. City-held composition is in this pie chart in front of you. 25% of the pie chart is in agency bonds such as Fannie Mae and Freddie Mac, which are asset-backed securities. U.S. Treasury bonds, 13%. Municipal and state bonds, about 7%. Corporate bonds, about 18%. And CDs, about 6%. Overall, right around 69% of the portfolio is in bonds. And the remainder is in very liquid cash-like investments, such as the local agency investment fund, which is a state savings account for the cities, and that's about 15% of the portfolio. And the remainder is in cash, money markets, and cash-like investments. This chart shows a 2-year graph illustrating how our average maturity strategy has changed in anticipation of the fixed income market conditions. And I've got 2 years in here, and the rising years in the average maturity of the investments that we're holding. That was as we were watching the investment yield rates drop or be just unstable and very, very low. And so what the city was doing in this part of the investing during these periods was to invest in longer maturities to try to get more yield and try to retain more of the value of the investment for longer. And then, as you can see, as we move out into more current times into this area, there's a little more anticipation of change. The market isn't quite sure if the interest rates are going to be bumped up by the Fed more than they already have been recently, and so most of the fixed income market is holding shorter and getting ready, trying to make sure that the funds are available to move into higher yielding investments if that opportunity arises. There was an uptick in the target federal funds rate for the first time in 7 years, and that has the markets waiting for the Fed's next move, leading most fixed income investors to keep portfolios in intermediate maturity instruments that will slightly outperform Treasury bonds. With that, I'll entertain any questions, and this is simply a note and file item.
Any questions of Spencer? I only have one question. Who did you follow into this position? Who was your predecessor?
That would be the city manager, Steve Krager.
And did I hear you say that it was on a decline when you took those investments were on a decline when you took over?
Yes, the market, which the small
That was a
city
yes
treasurers.
That was just a yes or no. And guess who's following you at the dais?
Thank you.
All right. Have a good night. We'll note and follow your report.